I think let me clear this, then it's far. So yeah, I saw some analysis from you guys, which I can say, yeah, most of them they are now great. I start to like what I see. But I think maybe there is something that we still need to go through, try to recheck, and just to make everyone to understand way, way much better. And that is, as we are on the breakouts, so we still gonna, because I can see people still struggle with the trend lines. But the best way to identify a trend, the best way to identify a trend is to understand where was the last trend or where the last trend ended. It's like joining blocks. If maybe you want to draw another block, you have to know where this one ends so that you can join those blocks. So even the trends work like that. Even though the other one might go up, you should know where was the other one going, whether it's an uptrend or downtrend. And if you know about that, it means you're gonna have a simple job to draw your downtrend because you will understand. Plus, you're not gonna actually draw inside a previous trend. Remember that. When we draw a trend, we don't draw something like that. Every trend has to be clean. If it's an uptrend, it's like that. Once the market breaks out, we have to draw it outside because this is a different structure. So if we can go on the chart, first thing first, let me clear this because it's, I think I had a class earlier. We were talking about this. So on your chart, the best thing that you can do, remember, you are going to go on a 4 hours time frame. And what you're going to do here is, let me place this here. What you're going to do here is you can just try to make sure that the chart fits nicely in your on your screen so that you can see the uptrends and the downtrends. You see. So still, this is just, I like this strategy because even if we're going to talk about breakouts, it's still going to make sense if maybe you want to, if you still have a problem identifying the trends. You see. So when you can easily see the chart like this, you can easily see few trends. Maybe you can say, Kenzo, I see a downtrend there. Okay, that's nice. You also see an uptrend there. That's very nice. And now, obviously, we can say we also see a nice downtrend. So what do we do? So for you to get this one right, the current trend right, it means you have to know where the last trend ended. So the last trend is going to be this one, not this. So which means on your chart, the most important one is going to be also this, so that you can know where you can throw the new one. I hope that makes sense. So if you can know where you can where you're supposed to start your new trend, that it's everything that we need. We need that. We need to know where the last trend ended so that we can start to draw this trend actually correctly. So which means the older structures, they no longer matter that much. So what we're going to do is, okay, for me to draw here, I have to draw the trend that I see there before I can draw something, even though I'm no longer going to use that, but it will help me to understand where the new trend started, because I saw that we have some issues with that. So what we're going to do here is, remember, on that 4 hours time frame, we're going to draw something like that. That is our trend. If you remember, we started here. It was a downtrend. You can start from there, it's fine. But I just, as long as this makes sense, to me it's fine, because this was the start of the trend, so the market was not really connecting nicely. So I started drawing it there. Just to know where the trend ended. So this is the trend or my previous trend. So if you can check on the chart, I already made sure that I can only see two trends, the previous one and the new one. Do you see that? So with this type of a structure, it means I will know that, okay, this one ended here. We had a breakout, so which means my trend starts from here. I can start to draw my trend from there. So now this won't be a big of a confusion, because now you can see where the previous trend ended. You see, because sometimes I can see people like showing like 2020 or 2019 chart on the same thing. They're trying to draw the trend, and that is way too big. So, but if you do it like this, I think maybe it will be much better. Way much better. So now your chart, after you identified this, it's no longer matter, because this is also our previous chart. What we wanted with this trend is where it ends, so that we can easily draw our new trend. So now maybe we can have something, we can actually have something like this. Does this matter? No, not really, because what we wanted is to know where the trend ended, so that we can easily draw a new trend. And from there we can say, okay, let's try by identifying these structures. I see something like that, I see something like that, and also something like that. So let's try to draw that. We can say something like this. Sorry. I can draw something like that. There was a breakout there. This is what we have. So now we have this downtrend. So you can go on your 1 hour, try to identify whatever that it's in here. But yes, we were just looking for some sales or some scalping stuff, structures. But at the end of the day, this is a downtrend structure. You don't really have to study it inside there, but it's going to be way too easier for you to know what's really happening if you know that we are coming from an uptrend. Obviously, now we are on a downtrend. I hope that makes sense. So now we had a breakout. The market broke out here, went up. Remember, when the market breaks out, we don't really just jump on the market. We try to wait for that range structure before we jump in. And if we check nicely here, I think we just had only a resistance. We did not really have a proper support, but it seems like the market is going to go back on our previous trend. With that type of a structure, yes, it's correct. We can actually extend. The market is trying to do what? To adjust this type of a structure. Why? Because we had an aggressive sell. So once the market is having an aggressive move, most likely the market can break out, then continues to go lower. So that is not really actually a fake breakout. It's a pure breakout. A fake breakout, it's only one candlestick there, and then it comes back. But if the market will go and break out, when we check, it's almost a day there. So it's not really a fake breakout. The market was just adjusting the structure. So which means at the end of the day, we might draw it like that. But for now, let's wait and see what will happen there. I hope that makes sense. So now, I think Lily asked me something on Nasdaq, quite similar to this. Let me go there. Let me try to answer that here. So another one here. Well, let me clear this is for our, but it's fine. So for us to understand where the new trend is coming from, remember, try to check your previous trend. Where is the previous trend ended before you start to draw the new trends? You see, I think that can actually help. So what you do is, on your 4 hours time frame, you can try to squeeze everything here in. Yes, I show that there is also this trend like that on a bigger time frame. Yes, that is correct. But this is actually correct, especially when you go on a daily time frame. But We're not going to use that. We are going to have something like this. We can see that the market gave us a very proper uptrend, a downtrend, and now it means the market will decide here. So which means, since we can see two trends, the other one was going up, this was going up, and this is down. So what we wanted is the last trend before we have, or before we had the structure. So we're not gonna care much about this trend there. We're gonna care much about that. So what we do is we draw the trend first. And by drawing that, we just want to know where is our new trend started. You see, because if you don't draw this, if you don't really draw this downtrend, and just because you will start to say, oh, I understand, an uptrend starts here and going higher, you will get it wrong, because now when you draw your trends, it means most likely you will start to draw your trend inside a previous trend. If you start to draw your trend from that, it might look good, and which is mostly is gonna be good, but you started to draw your trend line inside this trend. You see, so which means, what about your breakout? Because breakout means the market is changing the trend from downtrend to uptrend. So which means our trend started here, not here. We were still inside this trend. We say the market breaks after we see the market moves out of this line that we have drawn on 4 hours time frame. If the market gets out of this, that is the start of the trend. You see. So now, if maybe we can see that this is a previous trend, what should we do? We have to identify whatever that we have here. So when the market changes or breaks this trend, it means that we expect the market to do what? To go higher, or to continue with that uptrend. But here it's a different story, which was influenced by fundamentals, which we're still going to talk about them. Fundamentals, okay, or economic events and stuff. So the market broke out. Yes, the market did consolidate a little bit, then went up. We had some proper structures around that level. The market did consolidate here and there. Then now we see the market trying to do what? To go even lower. You see. So the question will be, Kenzo, is this now a downtrend or something? I will say no. Sometimes maybe you might have something like that, and it still looks good. Obviously, that looks very, very good. But why? Why I'm not saying this is an uptrend? Because we just broke out of this downtrend. You see, we just broke out of that downtrend. And from there, every time when the market breaks out of that trend, we expect the market to continue to go higher. And maybe the question will be, when can we start to say this is a downtrend? Most likely when we say that, it's not an easy one on this one, because the market, mostly when the market breaks out, it will create a ranging structure, especially very closer to where the market broke out. Then after that, the market continues to go lower. This one was going to be simple. But this one here, it's a bit different, because our structure was not really clean. So which means we're just going to use a zone where the market broke out, which is going to be this area. And if we check where the market broke out, I will try to say, you see this zone there. If the market breaks out of here, we will say, you know what? It seems like the journey to the upside, it's no longer good for us. So we have to look for a sell. You see. But remember, another thing that I see people make some mistakes is, when the market breaks, when we come in from a downtrend like that, once the market breaks out here, you are not forced to draw your support line immediately. You are not forced, but what I can say is, you can identify your ranging structures, support and resistance. Try to do that, because most likely once the market breaks out, you're not gonna get proper structures. This structure is very, very, very young or still very new structure. If actually we can say very new uptrend, even though we still don't really have proper structures. Most likely the market doesn't just give us structures exactly when the market breaks out. The market will take time. Like here, I think this is gonna be a proper support. Once time goes on, maybe we're gonna have another one there. Then we're gonna start to connect that once time goes on. But at the moment, the market is still confusing us here. We had some. Remember, this is not forex. This is indices. If we talk about Nasdaq, so which means this moves. Sometimes we can tolerate other moves because we understand that there were some effects from other companies. So at the end of the day, the market might sell, but still, we still expect to buy. I think this will talk much about when we go on the fundamentals, when we talk about the fundamentals, because sometimes fundamentals can actually have an effect for a week, or let's say most of the time we're going to have some serious effects from the fundamentals. A few days ago, we had not a few days ago. Last week we had Nvidia earnings, which were positive. We still have higher rates or interest rates in the US. We're expecting the rates cuts this month, and it seems like jobs are going down. It's like employment is slowly going down, manufacturing is going down. So those things, they have a direct impact on the stock markets. So which means it's like there is a time where the market doesn't really follow everything that you throw there, because the market is still digesting the news that we had on table before it continues. Like now, let's say tomorrow the market might be here again. It's possible. The market might be back. Yes, maybe there is a possibility for the market to go down, but with the market, with this, the market might be here. So which means if you were looking for a sell, and at the end of the day, you end up losing. So the aim for me to show you this is because I want you to have one idea. I want you to have one idea in the market, so you don't really have to see a sell, buy at the same time, because at the end of the day, you end up losing, or you're not going to have enough confidence when you take some trades. You see. So what we're going to do here is we have to understand, if you can easily identify the previous trend, you can easily draw, you can easily say that whatever that is coming after is going to be an uptrend until certain things are broken. Like maybe if I can easily identify my support area, if that is going to be broken, I will say the market is changing the trend. But if the market still continues, I'm still positive that this trend is still going to continue. You see. So now, as I was talking about the trends, let's go back. I think we did talk about breakouts. So on the breakouts are quite straightforward. I think this is going to be the last session for breakouts. So, but I will still continue if maybe you need some assistance. But what's really happening with the breakouts is quite straightforward. The market breaks the line that you have drawn on a 4-hour time frame. This one. That resistance. Once the market breaks out, we already know that it means that the market is about to change the trend by breaking out. But we don't really just act immediately. I hope that makes sense. We don't just jump on the market immediately. We wait. We're waiting for the market. Most likely it will create something like this, where the market just range a little bit. I think I showed you this. It will range before going up or down. If it goes up by breaking this support area, it means the market will then continue with the previous trend. So if maybe the market breaks this resistance, then the market will start to continue with that trend line, sorry, with the trend structure according to the breakout. Similar to when the market is going up, the market breaks out, most likely, remember, the market will create this type of ranging structures. Those ranging structures, we can try to draw them. Remember, they might not be that clean every time, and by doing that, if you can identify them, that's fine. When the market can break this support area, most likely the market will continue going even lower. But if the market breaks this resistance, most likely the market might end up continuing with our previous trend. I think this maybe it's something that might confuse other people, and they think, oh, Lily, I think maybe she thinks it's something like this, and I understand that. But at the moment, we're just waiting for the market to break our support there. I think that is a not really stronger support, but it looks like a proper structure that we can call it a support. So if we can have something like that, once the market breaks out here, we can say, yeah, it's good for us to say that it's a sell. But it seems like the market will end up reversing. You see, we don't just conclude and say it's a sell just because we see a nice structure there. Sometimes the market will create those type of structures because at the moment, we know very well that they're going to cut the rates. Some stuff are going very well. And for everyone to get in on the market here, the market won't like that. You see, it's like an easy meal. So the market will try to confuse everyone. Once everyone is out, once everyone is starting to sell, then the market will start to go up, and it's going to be a difficult one for everyone to jump in again. You see. So let me check this. I think we have some very nice structures on USD JPY and the other ones. GBP, okay, not GBP JPY. Okay, so I think last week I did show you this. So if you can easily identify the trend like this, you draw the trend line. Once the market breaks out, most likely, guys, like almost always, try to find if maybe you can get a ranging structure. So which means you're not gonna just jump immediately and say, oh, I see a breakout. It means we said it's gonna change the trend from an uptrend to a downtrend. It means I'm supposed to sell immediately. No, we don't sell immediately. We try the same structures that I said you should be looking for on your 1 hour. You will find those structures. Immediately after the breakout, you get something like this. So this is a very proper ranging structure. So which means we are going to wait for the market to break one of the support or resistance. If the market did break this resistance, we're going to say maybe the market is trying to continue with the previous trend. That was going to be a very nice adjustment. This was going to be an adjustment if the market did continue. But the market decided to continue with the trend, the new trend, broke out of that support. So from there, we were just going to do what? To continue with the new trend, which is going to be a downtrend. And with this breakout, it shows us that the market is willing to actually go even lower. Then at the end of the day, we have something like this. So from here, it was going to be some very good trades. So here the market is just trying to reverse here and there. But if you check nicely, after this breakout, we don't really have good structures that we can use to draw a nice downtrend structure. The market just melted here. So from there, we no longer have any structure. So which means you should understand what I was trying to say. When the market breaks out, it doesn't really mean that immediately the market will start to give you a proper trend. Sometimes that takes time, and we're going to just try to find or to take advantage of the trend by drawing our support and resistance, horizontal ones. Support, resistance, so that we can keep selling. But at the end of the day, this type of structures, these V-shaped structures, they will come along the way, and we will connect them and call them a downtrend structure. Already we know that we are on a downtrend structure, but we know that the market won't just give us proper points where we can connect like this. Sometimes the market will take time. Even if maybe we check this, you will see that the market took a very long time to reach this support area, around this area. Then the third time or the fourth time, it's when the market was breaking out. So we don't just necessarily just throw the line. Firstly, let's try to identify our ranging structures, and that will help us to understand what we're doing, because already we know that we expect the market to go down. So our job is to make sure that we draw support resistance nicely, and we know very well that around the support, around the resistant area, it's where we're gonna look for those cells. But for now, as we talk about breakouts, this is what we check. Another thing that we check, I think I did not really talk about it last week, is when the market breaks out, always check on your left hand side, because the market is always going to the right according to the screen here. So the market starts from this area going this side, because it's always moving like that, and it always leaves this trace of candlesticks. So what happens here is, when the market is breaking out, make sure that you actually don't have anything that can be a potential support or resistance. So which means once the market breaks out here, try to check on your left inside the trend if maybe we have something like this, where maybe it was a support or resistance, current, very new ones, not the old ones around this area, and check if maybe the market will end up respecting those areas, because sometimes the market might create something like that and go lower, and this sometimes happens on the with the adjustments. So let me try to find that. I hope I will find that. So let me see, around this area we had something there. Okay, the market did not really respect this. So sometimes when we say try to check on your left hand side, you check if maybe the potential support or whatever, will the market respect that. If the market goes below that, it's fine, we no longer check, because we still have the other ones, but these ones were old. So every time check the current support or resistance on your left hand side, if maybe the market will try to respect that or not. So I will try to check those type of structures. Let me try to check if maybe I will find any. This one here, no, this one was fine. This one was already okay. When the market breaks out here, I'm trying to make sure that you understand. No, the market here, it's selling. So here the market broke out. You can see here. Likely enough, we don't really have ranging structure. The market broke out and started by going down. So what do? Check on your left hand side and see if maybe we have any potential support or resistance. Likely enough, these structures is the same structures that we draw on our 1 hour. So our potential support here or resistance, it was going to be this. So we check if maybe are we supposed to sell immediately? No, we have to wait for the market to go below that. We're not breaking, because breaking is like the same area, I mean same structure, but this was a different trend, which means I will wait for the market to go below this area before I look for that sell, or before I consider everything. Because sometimes with some adjustment, the market breaks this level here, comes around this level, and start to move like this and start to go higher. And when you check, it is still around the same zone, you see, but the market did break out according to the diagonal structure. So check every time on your left if maybe you have any closer support or resistance, and if maybe it's there, wait for the market to go below that before you look for that buy. Oh, sorry, buy or sell, if maybe it will depend on the trend. So if maybe it was a downtrend, it means it was going to be something like this. The market goes down, let's say it's going to be here. and then the market breaks out. So here we were going to do what? We're going to say we had a previous trend. You see that? We have a previous trend, and maybe let's say the market broke out here. So what we were going to do before we look for that buy, we have to look at our left hand side. We had an area which is possible the market might respect. So the best thing you can say, okay, let me try to make it like that so that I don't really draw so many lines. So what I was going to do here is, okay, it's fine. So what I was going to do here is, I can see the breakout. I was going to consider buying if the market goes above this level, because sometimes the market respects this area and start to go lower. And when you check, it was the same level that I had before, but maybe you did not really pay attention. But should we check the older ones? No. If the market can break the first zone, it means it won't respect the other ones. So the one that is closer, we're going to use that. But remember, it's not going to be everywhere. You can't get this everywhere. So which means it doesn't really happen that much. And mostly when it respect this, mostly it will just arrange like that, and we can easily draw that. So once the market breaks, we can say, yes, that is a proper reversal. The market will be continuing with the previous trend. But if we break the resistance, it means now we can say we're starting with the trend. Already we knew that the market broke out, but we had to wait for that confirmation before we take any potential buys or sells. Any questions? I hope that makes sense. Okay. I think this can be a very good trade. So yeah, I think you don't really have any question. Let me check something. Every time I'm trying to show you something, I don't really find that. Oh, I think here I'm forcing this one because I don't really see the other ones, but we can just try to work with this. I think it was like this. Yeah, I think before we had something like this before. It was a proper support area going up. Before this area comes along, let's see, I'm trying to copy. Oh, pressing the wrong button. So this is what we had before. This was a Bitcoin. I'm talking about trying to show you the thing of checking on your left hand side before. So the market broke out. I think something like that. The market broke out, but we have to check on our left hand side. But this one was too much, I think, because the market did go even lower. But mostly it's something like this, where mostly it doesn't really go lower like that. It's just that this one is crypto. The market will try to break out, but if you can check on your left hand side, we had areas where the market can respect. Then the market just plays around, then continues going up. So what do we call that? Is it a fake breakout? No, that is actually an adjustment. But I think this is not what I wanted, because it's not really nice and clean. Let's find something that is clean. Any questions, guys? Any questions while I'm trying to find something? If it's clear, oh, that's very good. I think I don't really find what I want, but I will just throw that. So let's see this one. Okay, not this one was fine. So this is what I'm trying to explain, or it's the same thing that I explained before. So the market moves like this. So before breakout, then the market does something like this. What? This thing doesn't want to stop. Okay, so what we're going to do here is, you can see that on our 1 hour, you were going to mark this area as a resistant. You see that resistance and support, and the market just broke out. So for us to conclude and say, you know what, now we need to jump on a buy, it means we were going to do what? We're going to mark this level and say, even if you don't really mark it that long, as long as you can see that, oh, my previous support was here, it's a potential support that the market can respect. So what we can do here is, we can say only if the market breaks this level. Why? Because there is a possibility for the market to respect that and continue going down, and this will mean, at the end of the day, that will mean it's an adjustment. But once we start to see something like this happening, we can say, no, it's fine. Let's not really jump on that buy, because once the market breaks out here, we expect a continuation of a buy. But we can't just jump. We will just wait and see if the market will be trying to break that level. So which means every time once the market breaks out, if the structures are quite straightforward, try to check on your left hand side and see if maybe there is any resistance or a support, and mark that area. Once the market gets out of that structure, then we can conclude and say, no, we're buying, because sometimes the market creates something like this and continue with the previous trend. So should we care about the far resistance and support? No. The only one that is very closer is the one that we're gonna check. I hope that makes sense. So if you understand everything, guys, I don't really want to make this session very long, because I want you to understand everything on one session at a time, so that you can just catch this very quick. I hope everything made sense. Any questions? Okay, it seems like there's no questions, guys. If there is no questions, it means it's very good, guys. Yesterday I failed to meet with you. I was like quite busy with other things, plus the market was just punching me left and right, and then emotionally I felt like I can't actually able to go on with the training, because when the market punches you very hard, it's difficult to just do things like fluently. So I said, you know what, I don't really want to waste everyone's time, so we can just call that a day and we can just meet today. So yeah, that was the reason. But anyways, if you don't really have any questions, guys, thank you for being here. I will send the recorded session after, then we can call it a day, then we can meet tomorrow. So thank you very much.
Thank you.
Okay, bye.